you will see some trades that, let's say you get 20, 30 ticks on side, you hit your target, you get out, you go, brilliant, got the winner, and then you watch the market go another 50. Try and answer a question of what is harder. And this is really a question that doesn't have a straight answer. This comes down to a personal thing. I would very much put myself in the category of being a scalper. And this is something that I did not expect when I first started. I thought very much I'd be more in the line of a swing trader, and often swing trading feels more of a smarter, more intellectual pursuit. But ultimately, what I learned quite quickly is I don't find that particularly easy, and actually picking up multiple winners is something that I felt much more comfortable doing. But if we go and compare the two, from a psychological point of view, and I think this is often the thing that differentiates whether you would be a swing or a scalping trader. If you're a swing trader, what psychologically you have to have is the ability to just trust the process. Do your research, plan your trade. Once you get in the trade, you have to sit the trade out and let it become what you want it to be, or let it become what is available. The other side of swing trading is that because there's an infrequency of trade, you will have long gaps between trades, meaning that if you take a loss, you may well have to sit with that loss for multiple hours, maybe even for days until you get the next opportunity. Again, that can feel uncomfortable. For somebody who doesn't like sitting there and looking at their equity curve having fallen last week and seeing no movement back up, not being able to kind of deal with that, that can be really difficult. The other part of it as well, and this is where I think most people fall down when it comes to swing trading, is you have to accept that you can be a long distance on side and your trade still not be right, and you could still be able to take a loser on that trade. So yeah, I've seen people 100 ticks on side, but because you're still in a situation where your trade is not proved correct, you have to accept that coming back and stopping you out for maybe a 50 tick loser. It's not nice, but you can't try and move your stop to mitigate that. If you move your stop, what you're actually doing is diminishing the value of that trade in the long run, because a lot of good trades you'll get stopped out on, maybe for a small winner, but actually they're going to be the ones that do run for the big winner, and you would get really well paid on them. So you have to be able to trust the process, say, no, this is the trade, I'm doing it, and I'm going to accept that I'm not going to win many. I am going to take some pretty big losers when these things go wrong, and I'm also going to see myself a nice distance on side and still lose. The other side of swing trading from a technical perspective is swing trading requires an element of taking a trade on without full information. The clarity of where you can really get to. You can see the potential, but you can't be sure that this is going to work. And you have to go on limited information with conditional outcomes. I'll illustrate this much more clearly in a moment. Your stops also can't be moved. You have to plan your stop, place your stop, which is often pretty decent sized. You're looking at a stop that may well be costing you 50 ticks plus. You're looking, maybe say a 3-to-1 risk reward. The flip of that, from a scalping perspective, is accepting that you're only looking for the next available movement, which means you will see some trades that, let's say you get 20, 30 ticks on side, you hit your target, you get out, you go, brilliant, got the winner, and then you watch the market go another 50. You can't complain about that. You have to be willing to accept that the move is from A to B and that is it. And what you're trying to do is take on a lot of trades, trying to capitalize on those. You will also take a lot of losses. So whilst your win rate is good, the volume of trade means you're still going to take on a lot of losses. And if you're uncomfortable and don't like the idea of essentially multiple times being shown you're wrong, that's something that makes scalping very, very difficult psychologically. The FOMO is perhaps the biggest part. That idea that, well, you're missing out on, 100 tick move. What I'm looking to do is trade pieces of that. I want to trade the 20 ticks here and the 20 ticks there that I can be really, really confident on, rather than try and play for the ambiguity of how you go up for 100 ticks. The nice thing about scalping is that trades are binary. They work or they don't, which again is not necessarily something that people are going to be too comfortable with. A swing trade evolves and becomes the trade that you thought it might be. A scalp trade, when you get in, you are going to find out quickly you are right or you are wrong. And again, that kind of immediacy of information can feel quite disconcerting. The other part of it is you have to be quick to get into scalp trades. You have to see something, know what you're going to do, and act. This really is where order flow comes into its own.